Welcome back to another episode of Financial Market Insights for Traders, the podcast where we break down complex financial topics and help you navigate the evolving landscape of investing. I'm your host, Sophia, and today we're talking about an exciting and transformative trend in the financial world: impact investing. Impact investing isn't just about making money, it's about making a difference. It's a strategy that allows you to generate measurable positive social and environmental impact alongside financial returns. With increasing global challenges, from climate change to social inequality, investors are recognizing the need to align their portfolios with their values. Today, we'll explore what impact investing is, why it's gaining traction, the key sectors involved, and how you can get started. If you've been looking for a way to grow your wealth while making a real difference, this episode is for you. Let's dive in. What is impact investing? At its core, impact investing is about aligning capital with purpose. Unlike traditional investments that focus solely on financial returns, impact investing seeks to achieve both profit and positive change. The Global Impact Investing Network, GIN, defines it as investments made with the intention to generate positive, measurable social and environmental impact alongside a financial return. This approach has become increasingly popular among retail and institutional investors alike, especially as millennials and Gen Z drive demand for socially responsible investments. Today, more than ever, we see major financial institutions, pension funds, and hedge funds integrating environmental, social, and governance (ESG) factors into their decision-making. Governments and regulatory bodies are also encouraging sustainability-focused investments, further fueling the rise of impact investing. So, why should you consider impact investing? Let's take a look at its rapid growth and potential benefits. The rise of impact investing. Impact investing is no longer a niche concept, it's a global movement. According to Morgan Stanley's Sustainable Signals report, 85% of investors express interest in sustainable investing, and over $1.2 trillion is currently allocated to impact investment funds worldwide. Key drivers of this movement include climate urgency. The transition to renewable energy is happening at an unprecedented pace, creating investment opportunities in green technology, energy storage, and carbon credits. Social justice movements. Companies are being held accountable for their labor practices, diversity policies, and ethical governance. Regulatory policies. Governments worldwide are incentivizing sustainability-focused investments through tax benefits and funding initiatives. Clearly, impact investing isn't just about doing good. It's also about securing long-term financial stability. Now, let's dive into the key sectors driving impact investing today. Key sectors of impact investing. Impact investing spans a variety of industries, each addressing different global challenges. Here are some of the most profitable and socially responsible sectors. 1. Renewable energy and climate solutions. Investing in solar, wind, and hydro energy helps combat climate change while generating sustainable returns. The International Energy Agency, IA, reported that renewable energy investments surpassed $300 billion in 2023, with continued growth expected. Green hydrogen, battery storage, and carbon capture technologies are emerging as the next big investment frontiers. 2. Healthcare and biotech innovation. The healthcare sector has been transformed by AI-driven diagnostics, biotech breakthroughs, and personalized medicine. Companies pioneering cancer treatments, telemedicine, and mental health solutions are seeing unprecedented growth. The biotech sector alone has attracted over $200 billion in impact-focused investments since 2020. 3. Education and financial inclusion. Investments in edtech, vocational training, and microfinance institutions help close global inequality gaps. Digital learning platforms like Coursera and Duolingo have seen 40% year-over-year growth, making education accessible worldwide. Microfinance initiatives are empowering underserved communities, with fintech startups leading the charge. 4. Affordable housing and sustainable real estate. With rapid urbanization, affordable housing remains a critical issue. Sustainable housing projects integrating energy-efficient designs and smart technology are attracting impact investors. Real estate investment trusts (REITs) focusing on sustainable development are gaining momentum. 5. Sustainable agriculture and food security. Food production is evolving with vertical farming, lab grown meat, and AI driven supply chains. Investments in organic farming, precision agriculture, and food waste reduction solutions provide both financial and environmental benefits. The global agri-tech sector is projected to grow to $45 billion by 2027. Financial returns in impact investing. One major misconception is that impact investing sacrifices financial returns for ethical considerations. However, studies have shown that impact investments can match or even outperform traditional investments. 88% of impact investors in the GIN 2023 survey reported that their returns met or exceeded expectations. Companies with strong ESG practices outperform the SP 500 by an average of 3% annually. Additionally, ESG-focused companies tend to be more resilient to regulatory risks and market downturns, making them attractive investment options for long-term stability. How to get started with impact investing. If you're interested in incorporating impact investing into your portfolio, here's how to begin. 1. Define your investment goals. What matters most to you? Clean energy, healthcare, education, or fair trade? Align your investments with your values. 2. Explore impact investment funds. Some popular ETFs and mutual funds include Calvert Impact Capital, Parnassus Investments, iShares ESG Aware MSCI ETF. 3. Invest directly in impact-driven companies. Look for publicly traded companies or startups leading innovation in sustainability and social impact. 4. Evaluate financial and social performance. Use key performance indicators, KPIs, like carbon footprint reduction, job creation, and ESG ratings to assess impact. 5. Consult financial advisors specializing in ESG investments. Professionals can help tailor an impact investment portfolio that aligns with your financial goals. Final thoughts. The future of impact investing. The impact investing movement is not just a trend, it's the future of investing. As sustainability and ethical governance become more integral to financial markets, investors have the opportunity to make a difference while securing strong financial returns. If you're ready to start impact investing, check out crystalballmarkets.com, where you can explore a variety of impact-focused trading opportunities. That's it for today's episode of Financial Market Insights for Traders. If you enjoyed this discussion, be sure to subscribe and leave a review. Share this episode with fellow investors looking to create profit with a purpose. Until next time, invest wisely and make an impact.